Even if you're successful, a lot of the very successful founders and companies, they leave after about a decade.
What is driving you to keep working so hard, and what's like the goal?
One of the things that was very clear to me was that technology and scaling technology is one of the best ways to create a positive change. For me, it was like, okay, if I can make a small contribution to that, I'll be really happy with myself.
What do you think is the future?
Self-improving products. And so products that dynamically react to us as users. They were like, no, you guys should go out and race now. I'm like, I don't feel like it, I don't want to. And then Sam Altman, who was still working with, his partner at YC at the time, met with me, was kind enough to say like, hey, Spenser, like, stop being a pussy and like go and raise now because you have the opportunity and the traction and momentum, and so like take advantage of it. And so we ended up going out to raise and we put together a great round for the Series A.
How do you feel the difference between a founder and a VC is? How do you think people should choose a career? Building a company or trying to become an investor and potentially raise a fund?
It's very hard to be successful as a
There's so many questions that I want to ask, and also Ruben. And
yeah,
then,
very happy to talk about whatever would be most helpful for you guys.
Okay.
So you tell me, what do you want to know?
So I want to know, you built like a huge company, and you're already like, I think we listened to a couple of podcasts. They said Amplitude is already like a 300 million revenue. Yeah. Okay. And so my first question was, now that you've built this, and it's been a lot of hard work, and for people like us that are starting out, it's already kind of like, what, like that's a dream. What is driving you to keep like working so hard, and what's like the goal?
You know, I spent a long time thinking about this before getting into startups, and thinking about, I was lucky enough to have the choice of a bunch of different careers. I could have gone to tech company, I could have gone to finance, I could have gone to consulting. And one of the things that was very clear to me was that technology and scaling technology is one of the best ways to create a positive change in the world. And that sounds corny and trite and all of that, but like, I am a huge believer in people's lives getting better because of technology. If you think of how our lives have improved from today versus 10 years ago, you know, it's all the changes are because of improvements in technology, because we have phones and the internet and access to people and all these incredible, amazing things. And so for me, it was like, okay, if I can make a small contribution to that, I'll be really happy with myself. And one of the lessons from looking at startups was that startups is the biggest, most scaled, most impactful way to do it, because you can compound these things and they can grow, infinitely. So you might look at Amplitude and be like, oh, 300 million, it's like a big company. But from our standpoint, it's not. Like, I look at a company like Adobe that's doing, say, 5 billion a year in revenue on their equivalent business to them, and that's what we're going for. Or you look at a company like like what Microsoft has done, where they're doing, tens of billions or hundreds of billions a year or more. There's always more impact, more to be had, no matter where you're at. Now, I've been lucky enough that both we've been successful, and that I've been able to stick at this. We're 13 years in Amplitude, and one of the interesting things I saw was that even if you're successful, a lot of the very successful founders and companies, they leave after about a decade. So I looked at a bunch of peer companies to me when we were early on. It was crazy, even very successful companies that had gone past 100 million or what have you, founders had left. And so I spent a lot of time thinking about, how do I set up my life so I can continue to do this? Because if all you do is show up, you'll keep compounding whatever it is that you're doing. Not too long ago, we were 200 million and then 100 million. And then, I think 2021, I want to say that's when, or 2020, I think we're 100 million. And not too long before that, we were 10 and 1 and what have you. And so if you just manage to stick at it long enough, you can just keep compounding something indefinitely. And so now I'm thinking on the order of decades in terms of how to do it. Now, I will say it's like incredibly intense and very hard. And so it has to be the top thing in your life, and you have to be willing to get rid of a lot of other stuff in order to to go do it successfully. And not, like it's honestly not a good life setup for most people. Like you have other stuff you want to do with family or with friends or kids or hobbies or interests or whatever, like, or it kind of warps your entire life around building it. And so you have to ask yourself, what it is you're looking to get out of life. And I think one of the things I took away is like, hey, like I'm very intense and passionate about the work I do already. And so I might as well channel that in some way that is going to be great for the world.
I really like the answer, to be honest, because like you, I don't know, like there's a sense sometimes that there's not that many people that are like really ethical in the, in like, I don't know, but I think it might be another time to talk about that. But
it's funny on the ethics part. I think a lot of folks in business get a bad rap, and rightfully so. It's like it's even, especially in the finance world, there's like people who would like, throw their best friend under a bus to make a few more bucks, and so it's you can get some very bad behavior, but the long-term best strategy for get the outsized great results like is to is to be positive sum about whatever it is you're doing. That compounds way better than anything else.
Absolutely. And so, okay, you're saying now, for us, we're comparing like to Adobe. Another question that I have is, okay, I obviously don't have the vision of what it feels or what it is to grow a company from 0 to 300 million ARR. Like, how do you see what's in front of you, like when you're growing? Like when you're at 0 or you're at 10, how do you make the decisions so to keep growing? And I have like maybe like a better question. Like when you raise your first like kind of like $10 million or $50 million, how do you deploy the capital so that the company grows fast enough so you can have metrics to kind of like raise again? And what's the change between raising 15 or 10 million and then raising 80, for example?
Yeah, sure. So I think we spent a while at Amplitude, even before Amplitude with Sonalight, actually not getting any traction. So we spent a year with this company called Sonalight, which is a voice recognition app that helps you send and receive text messages. We got into YC. We had tens of thousands of downloads. Someone was using it, but didn't have real traction, and it was going to be hard to make a real business out of it. So that was a year. And then even in building Amplitude, it was about a year and a half before we saw our first real traction. So it was about 2.5 years in. And so if you're kind of pre-traction where it's not, you don't have a clear step to the next thing, then I wouldn't raise. Like the cost of starting companies have gone down so dramatically. It should be very easy to get something small started that just gets some traction somewhere. I mean, cursor guys are kind of a perfect example of that these days, but like with whatever business you're doing. And then once you have a nucleus of like some customers and a problem, you can start compounding from there and go raise. And so like, I actually wouldn't recommend raising until, or at least raising, you might raise like a million or two, just to do the basics. But like, you don't really need to do more than that, before your company is ready to start scaling. Now, once it starts scaling and growing really fast, then it's like, okay, you raise more to help compound that growth. And you can do that by hiring people and building more product, and in our case, like hiring out a sales team to help us reach more customers, and then kind of compounding that from there. It wasn't any magic to it. It was just, you have a product that a lot of people wanted, and then it's like, how do you compound that? So I'll give you an example. So very first customer we sold to was this guy, Brett Terrell from 12 Gigs. This app called Super Lucky Casino. It's like casino slots game. He was an ex-Zynga product manager, and he was used to having very high quality metrics when he was at Zynga. And so we ended up meeting a bunch of other folks who had a similar profile to him right after that. So we met this guy, Siki Chen, who was the founder of this app called Hey. We met this guy, Shane from The Hunt. We met like all these ex-Zynga folks who were, had gone on different companies and didn't have metrics there. And that like kind of created a nucleus. And then, you just start to, more and more companies hear about you. just by virtue of from what you've done before. And so you just kind of go talk to them. And at some point it's like, okay, it's actually more efficient to hire someone to go out and meet them and sell these companies and work on developing business with them and everything else, than it is, you just need more help to do it. And so you're not like, I think one of the biggest mistakes people can make is they think like the money, it's like money will come, like money is plentiful enough in this environment such that if you have something that's starting to scale and getting users, like you can very easily get some sort of funding for it. And then it's just a question of, okay, how do you find that and like deploy that in the right way to scale? And then in terms of hiring, building an org, that's a whole nother conversation that we can have. So my recommendation is start small, raise a small seed round, get some traction. And then from there, we raised $2 million seed round. We set out to raise one, but we ended up raising two. Then we raised an $8 million Series A when we were about $1 million in ARR. Then when we were about $5 million in ARR, we raised a $15 million Series B. And so it's very much kind of like you'd raise more in line with the traction of the company as you scaled.
Yeah, we saw that. You raised like almost every year since doing YC.
Yeah, I know. I wish we had done a little less in retrospect because we didn't really need the money. Were
you spending a lot of time fundraising? Were you always like thinking about fundraising? Or it was like more about the VCs coming to you because they saw your traction and they wanted to help?
Series A was a funny story. I didn't actually want to raise then, but I was lucky to meet. I was asking, I was kind of updating people on our progress, and we had grown quite fast. We had gone from zero, now it sounds like not that fast in the AI era, but it was quite fast at the time. 0 to $1 million in ARR in about 9 months.
It's very fast.
And I remember being like, it was November at the time and I was really tired and I was like, man, like, okay, cool. Like, let me just wrap up the year. And then in January, I'll go out to raise because you're not supposed to raise during Thanksgiving and Christmas because, VCs aren't around. And I remember talking to some folks at YC at the time. They were like, no, you guys should go out and raise now. And I'm like, I don't feel like it. I don't want to. And then Sam Altman, who was still working with, his partner at YC at the time, actually met with me, was kind enough to say like, hey, Spenser, like, stop being a pussy and like go and raise now because you have the opportunity and the traction and the momentum and so like take advantage of it. And so we ended up going out to raise and we put together a great round for the Series A. Then fast forward a year to the end of 2015, we were starting to spend, we were growing even faster. We had grew from 1 to 4.5 that year, but we were starting to get close to running out of money. I think we were getting down to somewhere between 6 and 12 months of runway. And it was like, okay, in order to continue aggressively hiring and feeding the demand that we see, we should raise again. And it was just kind of, doing the same thing again. And then Series C was in 2017 and D was in, I think it was late 18 or early 2019. So it was just kind of doing that kind of every step of the way. I mean, in retrospect, I probably could have held out for a little longer in each raise and would have had less dilution for it. But that's a second order optimization.
And what do you recommend to founders in order to choose investors? Like, what made you choose one investor or another? Like, I imagine that you got like different term sheets in the different rounds because you were growing super fast. Like, how did you choose the investors?
I was the first order thing. I think a lot of people try to over optimize this process, and so I just wouldn't recommend it. Like, at the first order, just you want to work with. Like you need to get money to grow the business, and so getting reasonable terms that are clean and don't put any structure in your business. That's what I'd optimize for first and foremost. And so we did that during our seed round and it was great, and we did that in many of our rounds and it was great. There was one exception I will say, which is our Series A that we did at the time at the end of 2014. And we were lucky enough to get 5 different offers from that process. And there were 3 that we were considering seriously. And one of those was Eric Vishria from Benchmark, except he offered, frankly, the worst terms. Like, it was the largest percentage of the company. They wanted 25% of the company. And yeah, and this is after an option pool, so in reality it's like more. And then wanted a board seat and had the lowest valuation. It was like 24 million pre-money round. But I looked at Benchmark's track record, and one of the things that was very clear to me was that by virtue of being in their portfolio, your chance at being a success was outsized. And so at the time they had invested in Snapchat and Twitter and Zendesk and New Relic and Yelp and Instagram, and it's like half Silicon Valley. Where you're like, whoa, who are these guys and where'd they come from? And so, and I was very, very lucky that I did it in retrospect, because I have learned more from Eric in terms of what it means to be a great CEO the last 10 years than from anyone else. So that was the one round I'd say is an exception, the Series A, where you will spend a lot of time with your Series A board member, because they're going to have the largest percentage of your company outside the founders. And, there's a lot of company building from that point onwards. Outside of that, it's less of a big deal. I will say, we did, the one other one I'll call out is Sequoia. We're very lucky to work with the folks there. They're the real deal. There's a reason they have the reputation that they do. But it really is investor and partner dependent. My one other recommendation would be do references on if you're ever adding someone to the board. If you're taking someone's money without adding them to the board, you don't need to. But if you're adding someone to the board, it's like hiring an executive you can't fire. And so do the work to make sure you're getting someone that you trust deeply in that position, because you can hear hundreds of horror stories of people who had board members that they realized were not aligned to what it is that they're trying to do with the business in retrospect.
Sweet. Nice.
I like that you mentioned a lot compounding, and we mentioned that word a lot as well. We actually were thinking about calling the podcast Compound.
Oh, I love it. I love it. Yeah, it's the incredible part is the incredible part of compounding is that, exponential growth, where your growth in a subsequent period is a function of your growth in the period before it. It's an incredible phenomenon, and markets are so big these days. You can do that for a very, very long time.
Another thing that we talk about all the time is the 20-80, the power law. Mm-hmm. What things would you say that are the 20% that that you do that affect the 80% of your results? It's a tough question.
Recruiting, no question. That's where I universally feel like I still don't spend enough time on, and I think most leaders just don't spend enough time on, is how do you get a great team in place? There were a lot of, the biggest regrets have been when I've compromised or I've gotten tired in a recruiting process and ended up hiring someone that was not the best fit for the role or for the business. Now, I think we're in a much better place now, but that was probably the most painful lesson that I've learned, is just one of the rules is spend a third of your time recruiting. It sounds like a lot, but it's when you're scaling, when the early days just building, it's you just need to go build, but a third of your time, because the leverage you get from that is just incredible in terms of getting a great team.
And how do you manage the feeling of responsibility of managing such a huge company, and also the risk? What are your mental frameworks that you might have in order maybe thinking about revenue burn and stuff like that?
On the revenue, revenue versus burn, that's actually not, especially in our industry in SaaS, it's not solved, but it's a pretty straightforward set of parameters. There's a rule of 40 that you want your growth rate plus your free cash flow rate to be add up to 40 or more, and so that's a good target to shoot for. So if you're not growing, you really should become more profitable. If you're growing, you can push the profitability down. Particularly as a public company, I think we're profitable now, and then continue to improve on that profitability. I think the other thing is we've also been clear that so that's kind of the guardrails, but then within that, it's we're very much indexed towards growth, and so how do you? The interesting part is that, believe it or not, it's not actually a dollar question a lot of the time. where you're doing 300 million in revenue, we have, close to that in terms of total expenses. And so it's actually, there's a lot, that's a lot of capital to be able to move around and to allocate to specific areas. And so, it's like, once you're at any sort of scale, it's, there'll always be people asking for more headcount, more stuff, but that is almost never the constraint on the success of the business in my experience. It's like, do I have leaders that are effective that you can deploy money, resources behind so that they can scale and be successful at what they're doing? And then a lot of times, honestly, the best people need the least resources, believe it or not. And so I actually, and so it's just like, I've set a constraint and we set a roadmap of like how the business, as we continue to get to larger scale, is going to be more and more efficient as we do, and we'll follow that. And we're profitable on a cash flow standpoint today, and so that's great because now it's like you're not worrying about the existential existence of your business.
How has your role as a CEO changed since doing the IPO?
It hasn't changed much, believe it or not. Public markets and the private markets, you're actually used to doing the same thing because every year or 2 years or whatever it is, you go out and raise anyway. Except the difference in public markets is instead of doing it all at once, you're doing it every quarter in small chunks. And so I spend probably 3 days a quarter reporting out on results and doing effectively what is a mini fundraise, but it's the same muscle. And so pitching your business, to private investors, same as pitching your business public markets. And then you get the full spectrum of folks like you do in private markets. You'll get folks who want to understand more about your business. You get folks who have no clue what they're talking about and you're okay ignoring. And you have folks that are very, very sharp and have great insight on and have good information for you. And so it's very similar to the private market, running your company in private markets in terms of my day-to-day. I will say having a liquid currency for the stock is mostly beneficial. You can do acquisitions that a lot of our competition who's private cannot. You can attract and recruit talent that we couldn't if we're public or if we weren't public. So there are downsides though, like having a stock price that's volatile, like especially as a small cap is very painful because it's incredibly distracting to the day-to-day of the business. But that's just part of life at the next level.
Yeah, and we were lucky to attend your Amplitude AI Agents event.
Thank you for coming. Thank you guys for coming. I'm glad it worked out. Yeah, you guys just pinged me on LinkedIn, right? Last week. Yeah, that was great. That's great. I'm glad it all worked out. So I sent it to our team, and they're like, "Oh yeah, these guys are awesome." I'm like, "Cool, okay, great. Let's bring them here."
Yeah, they invited us to go to the event too. It was amazing. We learned a lot. We were amazed.
Thanks for coming by.
For the people of our audience that were not able to attend, can you do a brief summary of what are the new agents, the new products that Amplitude is launching now?
Oh, absolutely.
And that they may try.
Absolutely. So the key is that no one in the data space has done anything really significant in terms of getting AI to be more effective at impacting, at changing how you build product. And so this was our first big shot at it. And so what Agents does, it's like a team of product managers that's always working on your behalf. So it's trying to find insights in your data, spotting trends and anomalies, watching session replays, coming up with a hypothesis, creating different variations of experiments, deploying those variations, monitoring the success of those, and kind of doing that again and again and again and again. And so it's our look at how to fundamentally reshape the process of building product with data. In terms of, from first principles. I think a lot of companies have come out with incremental AI stuff on their products. But we've kind of rethought, okay, how is this going to work if you have a team of analysts that's working for you all the time? And so, we just saw some amazing demos where it could create variations for websites, where it could spot anomalies in the data, where it can watch sessions for you, where it can create guides for you. And we just did the launch of our beta today. And so customers can sign up and we'll let them in over time. And then the goal is to get it to the rest of the market later this year.
The agents design and create new websites that convert more.
I was surprised. I thought it was going to take us a lot longer to get to that, but the team's actually done an amazing job.
Yeah, it's really crazy. I think this stuff you couldn't do 1 year ago. it was no, I think it was impossible to build because AI wasn't.
Yeah, you couldn't have built it a year ago, no question.
Because we saw how an AI agent was analyzing the website and optimizing it, changing the language, adding buttons, like it was in 5 minutes. It was incredible.
I appreciate you guys coming by and looking at it. The problem today is that this process is so manual to like look at data, try to figure out what's going on, try to come up with a hypothesis, trying to test it out, monitor those experiments, and really so much more of that should be automated and scaled. And so I'm excited to see customers use it.
What do you think is the future? You mentioned a little bit in the
self-improving products. And so products that dynamically react to us as users. So companies today have as product builders, you have all this data on what your users want, but you're not putting it to work at all. And so instead you should have the software dynamically change and adapt based on what it is that you're doing. And so I'm in the next few years, I think we're going to see the first versions of that, and software is going to get a lot better as a result because it can know what you want, and it can get all these great signals from who you are as a person.
That's so cool.
Yeah, and we saw that you went through Y Combinator.
Yes,
and
long time ago.
It's a big thing. The brand has increased a lot its value. We are seeing a lot of startups that are going through this batch, raising a lot of money with big caps, and like it's exciting to see these like amazing companies with amazing founders. And we are curious if you are an investor. Like we saw that 2 days ago, there were a lot of XYZ founders that were investing in the alumni demo day.
Yes.
And we're curious if you also invest as an angel or if you plan to
so
do it
I
in the
do
future.
all my investing as part of my wife's fund. My wife is a former Andreessen Horowitz partner that has a consumer AI fund.
No way.
And so I'm an advisor to her fund. And we've come across some great companies as part of that. So absolutely. But if they're great entrepreneurs, I always love talking to them.
Yeah. What? Okay, this is like the insider info. If you went in product management and like kind of like growth and tech, kind of like that, but like obviously tech, but not into product, what space would you look at if you were going to build a startup?
That's a great question. I think one of the ones, that's a great question. One of the ones I've always thought there should be a next generation of is if you look at Reddit and what Reddit's become, they've done an amazing job. It used to be, you go way back, it was like IRC chat way back in the day. And then it was like PHP bulletin boards. And then that eventually evolved through a bunch of different iterations. Slashdot was the first, but to Reddit. There's going to be a new version of that at some point somewhere, especially with a lot of this AI stuff. And so, like one example, you joke about people arguing on the internet, but it's like, okay, how can you help people put their money where their mouth is, where like they could bet on the outcomes of things that could happen? I think there's very interesting, I've often wanted to do that with people online. And so how could you, there's starting to be, with crypto actually, like betting markets and things like that. So how can you combine the two? How can you combine the two effectively? I think there's going to be some very interesting thing there. So instead of just being a big talker, you can see who's actually has a track record of success in what they say. I think that'll be I think there's some very interesting potential there to be built. What else? I think there's like, social stealth games. That's another interesting category. There's so much. I mean, especially I think with AI technology, you want to be good at understanding the latest capabilities of the models, and like very, very close to that, and that's super important for building.
Nice. Okay, I think last one question to wrap up. Okay, how do you feel the difference between a founder and a VC is, and how do you think people should choose a career if they're thinking about building a company or trying to become an investor and potentially raise a fund, but they're starting out?
Yeah, definitely be a founder. That's a much better way to go. it's very hard to be successful as a VC, believe it or not. It's incredibly hard to be successful as a VC. You know, the median fund loses money and is out of business pretty quick. So it's much harder. Whereas as a founder, you'll generally be able to like navigate your way to some. There's a lot of problems. The market has a lot of problems, and there's a big universe out there. And so as a founder, you'll generally be able to navigate your way to some niche or some place where you can create value on it. So the limiting reagent is definitely not VCs or money. In fact, there's probably too much on that side right now. The limiting reagent right now is great founders.
This is super interesting because most of the founders fail, no? Most of the startups.
Yeah, but if you look at their history, most of them end up, that leads to some opportunity that's worthwhile. So maybe they get acquired, or maybe they pivot that business to something else that's successful, or maybe that leads to some other opportunity that's even bigger. Yeah. You know, people forget, but like Sam Altman's first startup, Looped, was not a success. You know, they tried really hard to make location-based kind of social networking work, and they, in spite of being really smart and having some really smart people, they couldn't crack it. You know, you look at OpenAI now, and so I think the experience of being able to try to run a business yourself is invaluable. It's risky. It's risky in a bunch of ways, but I think you get unparalleled experience by doing it, and that leads to great opportunities.
That makes sense.
Yeah. Okay, Spenser, thank you so much for doing this.
Thank you guys. Yeah.
Great.
No, hopefully it's good content for you guys.
For sure.
I'm glad you guys could come by today, and I'm glad you guys, we could do this. So
thank you so much. I mean, for us, it's unbelievable to be doing this. We've been knowing Amplitude for many years. So
that's fantastic.
From seeing it on the screen to actually be with the founder is
it's a dream.
Yeah.
Oh, fantastic. What can we on the Amplitude side be doing better? Anything we can be doing better? I'm curious.
Well, we're not developers, so we don't really.
You're not as deep on that.
Yeah,
we're more on the investor side.
Yeah. Like the startup that I built with a couple of marketers, and we were using no code to build, and so it was really tough for us. But I think these new features that actually give you info about how to change the landing page. Yeah. And it does it for you. I think it's unbelievable.
We'll see how it turns out. Yeah, I'm excited. I think the code stuff, a lot of people is like, okay, I can create something from scratch, but that's actually not the problem. A lot of times that's actually, it's easier than ever to get started. It's like, how do you iterate on something that you have and make it great? Yeah. So anyway, we'll see. I'm excited. So
yeah.
Cool. Awesome. All right. Well, hey, thank you guys very much.
Thank you so much, Spenser.
You're welcome.
Thank you so much.
Yeah, of course.